So, Christine, from your perspective, how is this recovery going? And do we know enough about what the post-pandemic world of work looks like?
Sure, thanks for having me here. I think by and large, the tenant-friendly environment is here to stay for a while longer. Judging from the first quarter data from Knight Frank, we tracked 20 markets across Asia Pacific, and out of these 20, 8 of them are showing stable or increasing rents. So in the market, there is some green shoot recovery seen, especially in the gateway market. For example, Seoul, which is a star performer in the first quarter, we saw rents went up by 2.6%. This is on the back of very limited supply and also strong tech demand that's going into the GBD submarket. And in other markets such as Guangzhou, there's a lot of policy push for relocations of corporates to the Greater Bay Area. And for Taipei, it's a story of the semiconductor industry that's booming. So to answer your question on the future workplace, there's a lot of talks about, a hybrid working model. But in Asia, I think a lot of occupiers have expressed their concern about hybrid working model. And because of the relatively quick pace out of this COVID, I see a lot of occupiers are still bringing their workers back to the office. So we're not going to see a lot of disruptions from this hybrid working model. In fact, according to our firm's survey, a significant proportion of Asia occupiers are still looking to expand their footprint over the next 3 years.
And we've seen, of course, the bank that spurred this conversation, Standard Chartered, looking to downsize its office footprint in markets like Singapore, right? You said at the time that this is likely to be an ongoing trend. How much of this do you think will impact the market?
I think the downsizing of the banks have been ongoing since the global financial crisis. So this is nothing new. But what's new is that some of the global banks we have talked to realize that they can actually go a lot more agile. So they are downsizing the footprint in the CBD campus. They are looking at decentralized locations. For example, in the fringe of the CBD, in some markets, even in Hong Kong, maybe we have the Kowloon East. So there's a lot of story about this decentralization strategy, which will play out quite nicely in the developed markets.
When it comes to the residential market, how strong has demand been? Because we continue to hear these measures coming from governments like China or in South Korea to cool the property sector.
Yes, for the residential market, it paints a much rosier picture. If you look at across the board in Asia Pacific, most of the markets have recorded positive prices and rents across the board since the third quarter of last year. And some of the markets have seen momentum gaining stronger. For example, in Singapore, we are attracting a lot of the ultra high net worth individuals onshore. The latest landmark deal done by, for example, the Wang Snack Group, they buy up the entire office block, residential block in the most expensive district in Singapore. And in other markets, there's also a lot of domestic demand that's playing catching up as foreign buyers actually take a back step because of the border closures. So the local demand is very strong, encouraged by this low interest rate environment, which is very encouraging. In markets like Singapore, we saw that in the first quarter, the prices actually increased by 3.3%. That's also attracting some attention from the authority. But by and large, if you believe in the Asia growth story, there's still a lot of room to grow.